Very good morning to you all, friends. I am Sanjeev Singh, Chairman AASB, and on my behalf and on behalf of my Vice Chairman CA Vishal Bhai Doshi, I welcome you to this 115th program of AASB for this council year. Today's topic is using the work of another auditor and an auditor's expert. The auditing standards allows you to use the work of another auditor who could be an internal auditor, who could be a component auditor, and similarly take help of various experts. For example, actuarial valuation or the other valuation reports are taken. Today we will talk about to what extent you can rely on them and to whether it reduces your responsibility for the audit report in connection with an audit that you do. I'm extremely honored to co-host this program again along with the Kurukshetra branch. The chairman of the Kurukshetra branch, CA Raghav Garg, is here. And I'm thankful to our guest speaker for today, CA Kumar B. Raisinghani. Thank you, Kumar, for being here. And I will now request Raghav Bhai to give his opening remarks and then welcome our speaker for the day. Thank you. Over to you, Raghav.
Thank you. Thank you, Sanjeev Singhal. I welcome all, including CA Sanjeev Singhal, Chairman, Audit and Assurance Board, CA Kumar Raisinghani, and others on this technical session on using the work of other experts. Due to excessive workload and in this yuga of expertization, I see, we need to use the work of other fellow members. Although we all are experts in our fields, but we in some time of practice we need to use the work of other experts also. On this topic, we have with us CA Kumar Raisinghani ji. He's trainer, chartered accountant, qualified in 2010. He achieved the rank 39 in CA intermediate level. He is a young professional and have experience, although experience, I would say experienced professional of 12 years, post-qualification experience in auditing, training, and financial reporting, including double AS, AS, and AS, and IFRS. On corporate timing front, Kumar has provided training on standards on auditing and financial reporting aspects, including IFRS, Ind AS, AS, to chartered accountants firm in Mumbai. His financial reporting experience includes Ind AS implementation and IFRS conversation of wide variety of business encompassing law firms, financial services, BPO, oil explorations, and retail. Experience gained on these assignments help him to bring real life case scenarios to the training. And I welcome Mr. Kumar to please enlighten the session.
Thank you so much, Sanjeev sir, Vishal sir, and Raghav sir for such a warm welcome, and to the entire board for giving me an opportunity to speak at such an esteemed platform. It's really an honor and a privilege to be getting this opportunity, and I always look forward to these opportunities. So as Raghav sir and Sanjeev sir introduced that, we as an auditors, we use the work sometimes of another auditor, sometimes of internal auditor, sometimes of expert. So we have a series of standards, that is 600 series, which comprises of three standards: SS 600, 610, and 620. So out of these three standards, our focus today will be on SS 600, which is using the work of another auditor, generally a component auditor, and SS 620, which is using the work of auditor's expert. I'll just share the presentation, and I hope it is visible to all. So
yes, sir.
So as you can see, our topic for today is SS 600 and SS 620. We'll be discussing these in a sequential manner. We'll be touching upon what are the requirements specified in the standards, in these two standards, and how practically, what are the nitty-gritties, what are the challenges that we generally come across, and how we can resolve them. And basically, what are the practical applications of what is stated in the standard. Many times the auditing standards, as we all know, that mandate certain procedures. How do we actually implement it, and how do we make the most of these standards? And ultimately, see, at the end of the day, our objective as an auditor is to conduct an effective and an efficient audit. I would say both are really very important, because effective audit, because people rely on the opinion that we give. So the whole objective of assurance engagements is to conclude on the subject matter. So in case of audit, like it is financial statements. So when we are concluding, or when we are reporting, or when we are opining on financial statements, it enhances the confidence that the users place on the financial statements. So definitely the audit that we conduct has to be effective. And efficiency is also really very important, which we can ensure by suitably or properly planning the audit, so that at the start of the audit itself, we are very clear that what are the areas that we are going to focus on, how much time will be needed, where it will be needed, what will be the engagement team. So we have SQC1, we have SA220 that harp on these two factors. And uh, you know the quality of the audit has become of paramount importance, because of the economic importance it carries. So it has been a great initiative by the Auditing and Assurance Standard Board, whereby we are reaching out to members and revisiting these standards time and again, because so that we are in touch with what is given in the standard. Sometimes we get a new perspective. So it is a constant learning, as they all say. So all of the topics are something that many people would have already implemented or worked upon, but we might get a new perspective, or we might just brush upon what we already know. So in that light, I would like to start with my first topic, which is SA 600, that is using the work of another auditor. Now, before we deep dive into these two standards, there is one basic premise when we are working with standards on 600 series. The basic premise is that we as an auditor are responsible to opine on the financial statements, right? In the meanwhile, while we are reaching to our conclusion, we might require help of others. So this help of others could be the engagement team members, like the juniors. So the partner signing obviously will not, carry out all the work by himself. He'll rely on the work of juniors. He might at times rely on the work of a component auditor. So say, for example, when you're reporting on consolidated financial statements, there might be subsidiaries that are audited by other auditors. Or say, for example, when we are a central statutory auditor of a bank, there might be various branches that are audited by other auditors. So when I'm opining on consolidated financial statements, or when I'm expressing an opinion on as a central statutory auditor of a bank on the financial statements of the bank that include branches audited by another auditor, I am relying on the work of another auditor. And that's a practical thing that needs to be factored in. Sometimes I might have to rely on the work of an auditor's expert. So say, for example, especially during the COVID times, there was a lot of stress on the entity's property, plant and equipment in terms of impairment testing. Because all of a sudden the factories are shut down. Uh, so when you had anticipated that you'll generate cash flows over the 5 years of the remaining useful life, and 1 year has gone into lockdown, so you get only the 4 years, the asset is not maintained. So it creates a lot of stress on the assets. Many a times estimating that future cash flow is a subject matter expert, which is something different from accounting expertise or auditing expertise. As a chartered accountant, as an auditor, we are supposed to be expert in these fields, that is accounting and auditing. But there are times like when we say impairment testing. So we might have to get ascertain the fair value. The management might be ascertaining the fair value of a complex piece of machinery. So we might need experts' help. Or as Sanjeev sir pointed out in the beginning as well, we might have to rely on the work of actuary. Actuary generally is appointed by the management, so we call him the management expert. So there are a lot of areas where we as an auditor, we are either relying on the work performed by our junior team members, relying on the work performed by component auditors, relying on the work performed by management's expert, relying on the work performed of the by the auditor's expert, or in some cases the relying on the work of internal auditor also, as regards governance, risk and compliances. So all said and done, the ultimate responsibility for expressing an opinion rests upon us. The question that arises is, can we rely on their work? The answer is definitely yes. But while we are relying on that work, we should be careful. We should be diligent. So we should, in general terms, plan the audit when we want to rely on the work. There should be sufficient communication between, the party who is relying on the work and the party whose work is being relied upon, so that each party is clear with their roles and responsibilities. Okay, when we are, say, for example, evaluating the work of an actuary, obviously he's a subject matter expert, but still we should, make a conscious effort of, say, for example, checking, okay, what are the estimates or what are the assumptions that he has made. So very simple example, when you do actuarial valuation, one of the simple assumption is the salary escalation rate. Now we should try and understand what is the salary escalation rate assumed by the actuary. No, whether it is in line with the entity's practices, whether it is line with the industry long-term industry average rate. So all these things, we also need to understand, what is the source data that he has used. Okay, so for example, entity has 500 employees, but the management has sent only data related to 400 employees. So that's a clear, completeness issue that pops up. So even when you are relying on the work performed by others, the ultimate responsibility to express opinion is yours. So you need to be mindful of that fact. And can you rely? Yes, you can rely, provided you follow the specified procedures. Now the specified procedures are, so if you're relying on the team members, adhere to SA 220, whereby you train them, you review their work, you supervise their work, you direct them, you have quality control procedures in place. When you're relying on the work of management's expert, make sure that you're applying SA 500. When you're relying on the work of component auditor, make sure that you follow the steps in SS 600, same way 610 for internal auditor and 620 for auditors expert. So this is the whole premise of today's session, wherein we as an auditor are relying upon the work performed by others. So we'll start upon with SA 600. I have divided SA 600 into 5 buckets. So we have 5 agenda points. We'll first understand at a brief level, at an introductory level, what are the SA 600 requirements, where does it apply, where does it not apply, who is the principal auditor, who is the component auditor, so on and so forth. Then the second and the most important aspect that we'll study is, as a principal auditor, when you're relying on the work of the component auditor, what are the procedures that you need to perform? Okay, what are the mandatory procedures? What are some additional supplementary procedures that you may or may not, perform based on the facts and circumstances of each case? Again, very important, as the cliche goes, the work not documented is work not done. So how do you document that? Because tomorrow, if something goes wrong, if something is fishy, if an external inspection comes in, or the file goes for EQCR, or whatever might be the reason, the documentation will speak for you. So the procedures have to be well documented. There has to be, we'll also look upon the coordination aspect, because many a times when two-person are involved, there are chances of miscommunication. So how do we avoid it? Although both are professionals, so the chances of miscommunication are fairly less. But communication or coordination is really very important. And last, how do we report as a principal auditor when we are saying that we have relied on the work of another auditor? So these are the 5 buckets we have divided our session into. So let's start with an overview of the standard. As I said, before SA 600, before 620, or before any standard relating to the use of work of others, we need to be fairly clear about, the basic premise, which is this, what we have stated. So whenever you delegate work to assistant or use the work performed by other, auditor, you as an auditor you continue to be responsible for forming and expressing an opinion. You can rely, provided you have exercised adequate skill and care, and you are not aware of any reason that you should have not so relied. So basic checks and balances is something that we need to be careful, we need to be mindful of. Having said that, let's talk specifically about SA 600. So this standard was made mandatory in the year 2002. And current pace, the standard assumes a lot of importance because consolidation of financial statements has been made mandatory under the Companies Act 2013, from April 14 onwards. So because consolidated financial statements have been made mandatory, this standard assumes a lot more important role. And going further, consolidation is a peculiar subject under Ind AS. So because there are a lot of fair valuations involved, and so this standard becomes very prominent. The entity might have acquired a new subsidiary. There might be a disposal of subsidiaries or partial stake sale. So these are very common in today's practice. So that is why the standard becomes much relevant. So you as a principal auditor, that is auditor of consolidated financial statements, which include certain subsidiaries that are audited by other auditors, or in some cases are not audited. So then how do we go about it? So we'll touch upon those aspects when we talk on SS 600. What is not included in the scope of SS 600 is joint audit, because we have a specific standard which is SS 299 that deals with joint audit. And what is also not included in the scope of SS 600 is when you are dealing with predecessor auditors. So maybe for communication or relating to some opening balance or something of that sort. So those are outside the scope of SS 600. So having said that, let's look into a few definitions that are relevant from SS 600 perspective. So there are two auditors that are involved here. The auditor who's using the work of another auditor is referred to as the principal auditor. So in our example, he'll be the auditor of the consolidated financial statements, parent company's auditor. Now, if he himself is the auditor of the parent as well as the subsidiaries, nothing like it. But if, for example, subsidiaries are audited by some other auditor, now that person may or may not be a chartered accountant. Why I'm saying that, because the subsidiary might be a foreign subsidiary. So he might be a appropriate or suitably qualified, professional as per those relevant laws. So that other auditor is, someone whom we call it as component auditor. Component being the branch, subsidiary, or associates or joint venture whose financial statements are included, whose financial information is included in the information that is audited by you as a principal auditor. So yeah, these are the terms: principal auditor, component auditor, and a component. So we have set a base work or a premise regarding the situation in which SS 600 will apply, will not apply. Having said that, let's start with the acceptance phase. So what we follow these days is a risk-based audit approach, which for understanding purposes, we can divide into various stages. So the first one is pre-acceptance, wherein you assess whether to accept the assignment or not, whether to continue on the given assignment. Then once you decide that, okay, the assignment can be accepted, you send an engagement letter, get the terms of engagement agreed in writing as, required by IC 210 and the firm's quality control policies and procedures. Having said that, having established the terms of engagement, then we, do preliminary engagement activities so the planning activities like setting up an audit strategy, preparing a detailed audit plan. Then we go to the execution phase, and then we go to the reporting phase. Documentation is something that is common throughout. So our session will also be also flow in that aspect, because that is the most logical aspect of auditing that, that is practically followed. So first point to learn as far as SS 600 goes is, how do you decide as a principal auditor, whether you should accept the engagement or not. So say, for example, there is a company and it's a private limited company, but it's a little complex entity because Ind AS is applicable. It has a lot of subsidiaries. Some of them are in India and some of them are outside India. And you are being offered, or you're proposed to be appointed as an auditor. Now here, apart from the usual routine checks that we need to follow, the fact that the entity has certain subsidiaries that will be audited by another auditor uh, is something that you should also consider while deciding, whether and when whether to accept the engagement or not. What are the factors that we generally consider is, so say, for example, what is the materiality of the portion that we are going to examine. So suppose our total assets 95% belong to parent, and it's only 5% that comes from the subsidiary. So the decision might be relatively straightforward. how much do we know about the components business? What is the risk of material misstatement that we foresee in the components? What is the extent of additional procedures that we might have to perform? So say for example, we might have to send the group audit instructions, as is generally the practice. I'm sure many of you would have come across that. You might have sent the group audit instruction, or you might have received the group audit instructions. So as a principal auditor, at the planning stage itself, while you are accepting, you are very clear in your mind, okay, these are the components that are audited by other auditor. You bucket them into three categories. Sometimes you may say, okay, this component is straightforward, it is immaterial. So, just a report from that auditor will do. Some components you say, okay, these are material. So we'll send up a set of instructions to the component auditor, send him questionnaires, ask him to report to us on a timely basis, and accordingly we'll review. And in some cases, you might need certain additional procedures, like the component may be so material that I may require you to visit the component, apart from sending the checklist and other things to the component auditor. So factor in these procedures, and then decide whether you have the capability, competence to accept the appointment as a principal auditor. And as I said, at this stage itself, identify what are immaterial components, because if a component is immaterial, then the standard is very clear that you may not apply the procedures again. Whether a component is material, immaterial, okay, but individually immaterial, but material when it when you combine it with some other components, again, that is a matter of professional judgment. So be very careful, because these are the matters that are generally looked in by the external reviewers. So be very careful as far as document these consideration, because what has been observed is generally these are the documents that are missing. So we have seen a lot of firms doing over audit, or doing audit that is at a fairly good standard, but sometimes what is missing is the documentation aspect. But we should understand that documentation aspect is the very critical part in the entire jigsaw puzzle. So you might complete the entire jigsaw puzzle, but if the documentation is missing, then the heart is missing. So then the body will not function, something of that sort. So while I'm saying that, okay, we all know these procedures need to be performed, I think the area of improvement that we often look to is the documentation. And these days, as we are all aware that where there are automated tools also available, that electronic audit file, and also we have customized software, we have off-the-shelf softwares that are available that we can readily employ in our firms. So digital audit, as the term goes by. Now, having seen the acceptance formalities, so we have decided that we have the competence and we'll be able to perform the audit. So you have accepted the audit engagement, you being the principal auditor. Now we come to the audit procedures. The first and the foremost, that will start from the planning stage itself. SA 600 makes it mandatory for you to consider the professional competence of the component auditor. I'm sorry. So SA 600 makes it mandatory for you to consider the professional competence of the component auditor. And obviously, this would be the case if the other person is other than a member of ICI. So if the person is a member of ICI, then this requirement is deemed to have been followed. And why would a person be not a member of ICI? So it could be, say, for example, a foreign branch or a foreign subsidiary, or some, say, for example, some unlisted entity, not unlisted entity. I mean, some unincorporated entity in a foreign country or something like that, where the law or regulation do not mandate audit or something like that. So once we have set the ground, okay, we have identified what are the components, what are immaterial, who is the auditor, whether the person is a CA or not. Okay, if he's not CA, what are the qualifications that they possess? We having obtained this preliminary data, we come to the crux of this standard. So as a principal auditor, your single most important objective is to reach to a conclusion as to whether the work of other auditor is adequate for your purpose. Now, whether it is adequate or not is something that will for which you'll have to perform a series of procedures and obviously document it and then reach to a logical conclusion, okay, as to how it is adequate, not adequate. So what are the matters that we should generally consider? So this is where people send group audit instructions to demonstrate, as to how do we determine that the work of other auditor is adequate. So before we deep dive into what is there in the standard, let's look at the practical consideration. So when you are a principal auditor at the planning stage itself, you will get a list of all the components and everything. You will identify material components. You will see who are their auditors. You will evaluate the professional competency. Then you will prepare something called as a group audit instruction kit. Now, the group audit instruction kit will include a lot of questionnaires, checklists, declaration, etc. A few common checklist instructions detail is so the first thing there will be a single document that will bind all the annexures as we call it. So you might have an annexure for independence declaration. You might have an annexure for competence evaluation if the person is other than CA. You might take it from a chartered accountant as well. So no harm in that in an excess documentation. So you'll have an annexure of independence declaration. You'll have an independent annexure for competence evaluation. You'll have an annexure for audit planning memorandum. So whereby you are see whatever as a component auditor, the component auditor is going to plan the audit in line with standards on auditing, have working papers on his file. But those working papers will be his property. So what we seek is, something like a planning memorandum, which is a document that a principal auditor prepares and seeks replies. Okay, so as a principal auditor, you might seek, okay, what are the significant risks as noted in SA 315 that you have identified, and how do you plan to tackle it? What are the procedures that you wish to apply for accounting estimates for related parties for going concern, so on and so forth. So you get a planning memorandum uh, filled by the component auditor. Then what else is there in the kit is observation or review memorandum as to what are their conclusions. What is also there in the kit is a document that explains the related party transactions, because that will be useful when you eliminate intercompany transactions. What you may also obtain is a tax reconciliation kit, because Ind AS mandates those disclosures, and this will be helpful while you are uh, uh, reviewing the provision for tax in the CFS or the consolidated financial statements. What you might also wish to obtain is, or you may provide, is the materiality. Now, obviously, the component auditor, while he's evaluating or auditing the component on a standalone basis, his materiality levels might be different, but our materiality levels might be very different. So we have guidance that is available outside SA 600 on how do we calculate the materiality that the principal auditor communicates to the component auditor. So what principal auditor does is calculates the materiality thresholds and allocates it to various components. Now, at this stage, it is very important to note that, say for example, you have arrived at a materiality threshold of, say for example, 50 lakhs. Then the sum total of all the components might be greater than 50 lakhs. So there are calculation methodologies that are available at this juncture. So these are the aspects. Apart from that, having seen the recent times now, you as a component auditor, sorry, you as a principal auditor have to report on ICFR. So the component, you might need a declaration from component, regarding regarding the ICFR compliance, specifically when the company is outside India and not subject to ICFR requirements. Another aspect is you might Schedule 3 at present has a lot of additional disclosures on which they call it as additional regulatory information, like shareholding by promoters, shares held by person holding more than 5%, or CWIP aging schedule, intangibles under development aging schedule. So a lot of these complications have been introduced, or a detailed disclosure rather than complication, a detailed disclosure requirements that has been introduced by Schedule 3. So you might seek those disclosures specifically from the component, again, specifically where the component is outside in three. So what we are saying is, as an auditor, you have to decide whether the work of other auditor is adequate for your purpose. So for that, you send a group instruction kit. You clearly tell them that, okay, these are the documents that you have to fill and send it to me. It will be sent over during the course of the audit. You set a clear deadline, set a clear timetable, because so you do a reverse working. Okay, you have to sign CFS by 30th June. So you need all the information by X date, and you need independence declaration immediately, or you need Schedule 3 related aspects by this date. So you send a group audit instruction kit. Now, what this kit comprises is obviously a matter of professional judgment. So various CA firms have their own, customized kit. So you might send them over a kit as a kit over an email, whereby they fill in those Word file, print it, sign it, and submit it to you. Or you might have your own portal. So the big firms might have their own portal whereby they collect responses from the component auditors, so that it is, because they are maintaining the file in electronic form and all those things, so it is interlinked. So rather than providing him all the Word documents or a kit, so you send him a link, portal link to the component auditor, whereby he submits his response. So the manner of collecting information, what information, is obviously professional judgment, but we should reach to this conclusion. There are 6-7 basic things that as a principal auditor we should be very careful, and we should something that we should definitely consider is that first and foremost, whenever we are planning to use the work of component auditor, we should first advise the other auditor that this is the work that we are going to use. Again, becomes a lot more important when the auditor is auditor of foreign subsidiary, because he might not be aware with the reporting requirements in India. Ensure there is sufficient coordination, arrange for meetings, calls, document those meetings, document the fact that these meetings were communicated, send the minutes of the meeting over email, which will serve as a proof that meetings were communicated, and do this obviously at the planning stage of the audit, so that the audit goes smoothly, and there are no last minute surprises. Okay, we were not supposed to do this, you were supposed to do this. So make sure you do this. And the planning stage itself, inform the other auditor if there are certain areas requiring special consideration. So if you foresee that there might be concerns in revenue recognition because of, say for example, India's 115 becoming applicable for the first time in this year. That's an example that have happened a lot of years ago. But if you see such areas that require special consideration, and if you so you should highlight them. Rather than just communicating a general thing, these are the specific aspects that you should highlight to the component auditor, because then he'll plan and perform his audit in that way, and it will make sure that his work is adequate for your purposes, which is the ultimate goal that needs to be achieved. Perform procedures for or rather, no, I would say tell the other auditor, inform the other auditor about the disclosure of intercomponent transaction, because if the other auditor is providing those intercomponent transactions, the data is more reliable. The elimination at the CFS level becomes really very easy. So inform these things. These are specific things. These are obviously illustrated. You might add up your own thing that needs to be communicated. Most importantly, communicate the timetable, because as a professional, we respect the fact that if we know something is in advance, that this has to be done by this particular date, so we can plan our work and achieve a balance, or achieve a, as we said, effective and efficient audit can be done only if the timelines are agreed, and make sure that the goalpost is a fixed goalpost and it is not a moving goalpost. So ensure, obviously, practical considerations, the timetable might have to be revised, but make sure that those are exceptional circumstances. Advise the other auditor of the significant accounting, auditing, and reporting requirements. So as I told you, for example, Schedule 3, new amendments coming previous to previous years. Tell the auditor that, okay, these are the additional regulatory requirements as per Schedule 3. These are the amendments in CARO 2020 on which we need to report. again gains a lot of prominence when the auditor is someone other than a chartered accountant. That is, say for example, auditor of a foreign branch, foreign subsidiary, because he might obviously be not aware about the CARO reporting requirements. So update him, get a checklist, get a detailed disclosure from that person, so that the work has been appropriately divided. Obviously, ultimate conclusion is the principal auditor's responsibility. At the end of it, get a representation, get an acknowledgement. When you send when you send a group audit instruction kit, ask them to send an acknowledgement immediately that they have received these instructions, they acknowledge the receipt, and they acknowledge the fact that they'll be able to comply with those instructions and revert on a timely basis. At the end, when you have received all the documents, you might have certain significant findings. So, say for example, you might have a finding that there are certain problems in the ICFR of the component. Consider whether how significant they are at a group level, and accordingly reach to your opinion. Obviously, it's not necessary that if there is a modified report on a component, the consolidated report needs to be modified, because when you modify, you consider the materiality and pervasiveness. What might be material at a component level might not be material at group level. So I'm not saying that modify if the report is modified. I'm saying consider, or rather, not me. Standard is saying rather consider what are the significant findings of the other auditor. So these are certain must-have procedures, that we should and must perform, document, and conclude upon. Obviously, it involves a lot of professional judgment. So although it might look as a one slide, it might consume a lot of time during the audit, and specifically the senior members, because they will be involved in selecting what are the immaterial components. Okay, what are the instruction kit that we need to send, whether it needs to be revised, because for example, as I said, new CARO 2020 requirements or something like that. So perform these procedures diligently, make sure you document it. Apart from that, there are certain good to have procedures, as we would like to call it. Now, this would depend upon the circumstances of each case. Certain additional procedures that you may apply. The previous slide was shall. Certain additional procedures that you may apply is discussion with the other auditor as to how he has applied the procedure. So many a times, if he has applied a procedure, communicated his findings, the story is over. Right? You might be satisfied. But if you are not so satisfied, if there are misinterpretation, get on a call, get a meeting scheduled, discuss how the procedures were applied and what were this thing. Review a written summary of the other auditor's procedures if the need be, and in an exceptional circumstances, visit the other auditor. If sending instructions, getting on a call, getting over a Teams meeting does not solve the purpose, then obviously the last resort is visit the other auditor. So this is something that we should do. Now, ideally, when you are using the work of other auditor, there is a presumption that the work will be performed by the other auditor and will be submitted to the principal auditor. However, there might be certain situations wherein you as a principal auditor might have to get on the ground. So these are something like a supplementary procedures. So generally, whatever audit procedures will be performed by the other auditor, so the component auditor will have the responsibility to discuss with the component management. There might be cases where there are few burning issues where the component management is not agreeing to or something like that. There is a disagreement over the group policies. Then it might be so required that you as a principal auditor get on a discussion with component auditor and component management, bring everything together. But this will obviously be required only for exceptional basis rather than as a must have a procedure. And if required, get your hands dirty by performing supplemental tests. Hands dirty, I'm sorry if that's a wrong term that we might have to use. I'm sorry. But yeah, so get on a call, things not resolved, perform supplemental tests yourself. Again, this is something supplementary over and above what the other auditor would have already performed. So it's not that you are taking up the work of other auditor. He has already, so say for example, he has already reviewed the related party transaction, but you see that this needs to be revisited, then perform supplementary test. Whether it is required, not required, obviously it's a judgment call. So having experience would help here. So yeah, these are the aspects. So at the end, I would like by saying that uh, you know whether you have to perform supplementary procedures, whether you have to perform additional procedure will also depend upon your knowledge of the professional competence of the other auditor. So say for example, component principal auditor is ABC and company, and component auditor is DAF and company. Now they have worked in past together in terms of some other clients or something like that. So things might become easy. Uh, Coordination, liaising might become easy. So in that case, even the mandatory procedure might, help you reach to a conclusion that the work is adequate. If it's a first time interaction or if the client is new and everything is a little complex, then obviously additional and supplementary procedures might be required. Yeah. So these are the audit procedures. And I'm sorry, I forgot to mention it at the beginning. Any questions that we have, we'll be taking in the last 15 minutes. I had made a mental note of saying that, but somehow skipped my mind when we got into the midst of the standard documentation. So what should document include? Bare minimum 6 points. Obviously a detailed documentation would be required. So to start with, a list of components that are being consolidated, who is the auditor, whether it is material, whether the component is material not or material, how are we dealing with that? So if it's an immaterial component, we might just drop that, in the sense that do not apply SS 600. Material component, you send the group audit instruction kit. Very material, or I don't know, very material is not the word, but the first category whereby they have done the desktop review or visit of that component. So identify, have a tracker, specific, more so in an Excel files. Generally, we try and cover somewhere around 70-80 percentage. I don't know if that's a valid benchmark, but obviously you cannot have, it's like a ballpark number. So including the parent, are we getting comfort over at least 70-80%? Because if you are not getting comfort over 70-80%, then obviously the immaterial components are becoming material as a whole. So get on those aspects, understand them and document it. Don't leave documentation aspect for the end, because that will always be less effective. You might remember, you might not remember. And if you document it simultaneously, the world is a good place. Yeah. So have these details, significance, names of other auditor, whether it is material, non-material. Then have a separate document as to what are the procedures you have performed, conclusions reached from discussions, copies of group instruction replies that you have received, and in the extreme situation where the component auditor has made a modification to his report, how you as a principal auditor, has dealt with it. Okay, so these are the aspects that needs to be documented. I'll give you a couple of minutes to just go through it. Yeah, sorry. So these are the documentation aspect. So having discussed the procedures, having discussed the documentation, we come to a very important aspect, which we said is coordination. So that documentation and this thing will be pervasive as in will go throughout. So as a principal auditor, ensure that there is sufficient liaison between the principal auditor and component auditor. This is your responsibility as a principal auditor. Obviously, as a professional, the component auditor has certain responsibilities. So say for example, acknowledging what you have sent, sending the replies on time. So professionalism is expected on both the parts, but you are the one who will uh, lead the audit and lead these communication. Issue return communications wherever required. As I said, start of the audit, send a group audit instruction kit. And then as a other auditor, component auditor, so these were the duties of principal auditor, as a component auditor, it's your responsibility also to coordinate with principal auditor, get on a call if required, respond to their emails, acknowledge, perform your work diligently, and whatever the findings, review, discuss with the principal auditor. So I hope I've made it very clear the the scope applicability of SS600, the procedures that we have that are to be performed, the group audit instruction kit that we generally send, the determination of component materiality. Now, determination of component materiality is something that is a practical burning issue that we may come across. Because as I mentioned that, when you are allocating a materiality to the component, the sum total of materiality may be greater than what you have determined at a CFS level. So there are statistical techniques, tools that are available for that. So there are averages, weighted averages that we can employ for that. Make sure that individual component materiality that you have allocated does not exceed the total materiality that you have determined, because sometimes mathematics is really very funny. So make sure that this is adhered to. This will also be a little complex when, say, for example, your CFS materiality is based on PBT, which is generally the case. So be careful when you are allocating subsidiaries to branches, say, for example, having a loss. So in that case, having an absolute number would really work. How do you tackle? So these are certain practical issues. Obviously, there is no single solution that fits all for these kind of problems. What is the intention here is to highlight these issues to you, so that when you come across these issues, you are already aware that this is something that needs your attention. So you do a detailed research based on facts and circumstances of this case. So the base has been set, and yeah, these are the aspects that you should generally consider. Materiality, as I said, is one of the really important aspects. Again, whether a component is material or not is something that you also need to understand. But determining component materiality and communicating it to auditor, to the component auditor, is, in my view, one of the important aspects. Based on my experience and my area of the work that I have performed on the assignments that I have worked. So this was the important challenge that we came across as to how to calculate the materiality to be allocated to the component. We were very clear with the CFS materiality, but the allocation posed a lot of challenges, because, as I said, some were loss-making subsidiaries, some were profit-making subsidiaries, somewhere at the initial stages. So be mindful and obviously document all these aspects. Okay. Having said that, sent a group audit instruction kit, received the replies, got the acknowledgements, ensured coordination, and concluded that the work is adequate, not adequate, whatever. The ultimate thing that goes out to the external world is the audit report. So I believe partners' involvement should always be there. When it comes to audit report drafting, it might be even a simple case of copy pasting the sample audit report to the this year. So these days, a lot of firms have a quality cell that is responsible for coming up with the standard templates. So although we are using standard templates, the partner still needs to focus on what is written. Very important that he reads through the entire audit report, because sometimes things are very funny. You might have what you might have done is you might have been very diligent when it comes to procedures and all, but just relying on the template, and if something goes out, then this is something that goes to the external world. So I would say that better safe than sorry. Go through the audit report, read it, see whether it makes sense. Obviously, at a partner level, being the expertise that you have is, you might take only a few minutes to run through the entire audit report, and I'm sure you would have been reading it. So, because this is something that we are signing on. go through it, discuss with the team, and see how how much presence of mind your team has. As you keep on questioning them. So these days we have a lot of templates in a lot of organization, makes work easy. Standardization always helps, but at the same time, we have don't make sure that the team is not making a practice of same as last year. Concept SALY is something that they call. So make sure that they are exercising their mind to it, their minds and brain. It's so the template. The purpose of the template is to not restrict the creativity or the curiosity levels. So this should be there on a timely basis. Involve them in the drafting of the templates. So that way, that is how they'll feel the ownership. Make sure that there are training sessions in your organization whereby they are explaining the templates. So they'll have no other option but to go through the template and because they have to explain it to the firm, and obviously reward them if the training goes very well. Reward them if they are exercising their mind. So uh, it's a complete process, and obviously this is what our SQC1 also points out. Regarding the human resources. Yeah, sorry, I digressed a little bit, but something that I thought I should communicate. So when it comes to reporting by the principal auditor, as a principal auditor, when I'm relying on the work of other auditor, I need to state this fact in my auditor's report. So the division of responsibility should be very clear. So I should modify the report, not modify the opinion, modify the report and insert an other matter paragraph. It will not be an emphasis of matter paragraph because you're not drawing attention to something, some disclosure in the financial statements, but it will come as a other matter paragraph because it's something that is relevant to the user's understanding of the consolidated financial statement. So when they are reading the consolidated financial statement, they should understand that not all the components are audited by the principal auditor who has signed on the report. There are certain components weighing this much in numbers, in total assets, in revenue, so on and so forth, which are audited by other auditors. Where in an extreme circumstances you feel that the work of other auditor is inadequate and you yourself are not able to perform additional procedures, that will amount to a scope limitation. So if it's material but not pervasive, it will at a CFS level, it will result in a qualified opinion. But if it's material as well as pervasive, then it will result in a disclaimer of opinion. So say, for example, a new subsidiary acquired, but management has not yet appointed the auditors of that subsidiary, or they have not yet completed the purchase price allocation exercise for, goodwill calculation and all those matters. So as the subsidiary is material as well as pervasive, then, you will have to that will result in a modified opinion. In the first paragraph, we are saying a modified report. So how does a modified report in terms of other matter paragraph looks like? Let's have a look in the other slide. So what you have on the slide is an extract from annual report of one of the listed entity. This is the report on consolidated financial statements, whereby the auditor has made a remark in the report on CFS. Obviously, this is not modification of the opinion, which has been clearly stated in the last paragraph, if you see. So I'll quickly read out the content for you. It's a simple reading exercise that I'll take it up. So the auditors have stated in the other matters paragraph is, we did not audit the financial statements or CFS consolidated financial information of 19 subsidiaries whose financial statements or consolidated financial information reflect total assets of this volume, revenues of this volume, and net cash inflow of this volume as considered in the CFS. The CFS also include the group shares. So this is unaudited. Then the second point is, unaudited in the sense that not audited by the principal auditor as regards the subsidiaries. The second point is the consolidated financial statements also include the group share of net profit of 31.57 crores for the current year as considered in the CFS in respect of three associates whose CFS have not been audited by us. These financial statements or consolidated financial statement have been audited by other auditors whose report have been furnished to us by the management, and our opinion on the CFS insofar as it relates to the amounts and disclosure in respect of these subsidiaries and associates, and our report in terms of subsection 143, subsection 3, insofar as it relates to the aforesaid subsidiaries and associates, is based solely on the reports of the other audit. So you are clearly saying that when I'm reporting on ICFR, I'm relying on these subsidiaries or associates audit. But at the end, also, you're saying that this does not absolve you from your responsibilities. This is a division of responsibility that you have stated. The user should not, consider that this is a modification to this tune. Specifying the numbers is really important so that the users get an idea of, what is the gravity or what is the importance of what you're stating. So at the end, what you state is our opinion on the CFS above and our report on other legal and other regulatory requirements below is not modified in respect of the above matter with respect to our reliance on the work done and the reports of the other auditor. This is a common extract that we generally give. So make sure this is there when you have applied SS 600. Modify it if you have relied on the work of the branch auditor. The component is a branch. This is in the context where the components are subsidiaries. Right, you'll get a lot of illustrative reportings as a part of annexures to SN 700, 705, 706. So make sure you use that. Institute has made us available a lot of resources, that helps us, as the name goes, in standardization of the output. So Institute has been playing a pivotal role right from drafting the standards, drafting illustrative reports, conducting these training sessions. So make sure that we as a member of ICAI, we utilize them to the maximum extent possible. Yeah. So on that note, I would say that we are done with our first topic, which is SS 600. Now, it was a conscious attempt to, devote more attention to SS 600. Again, a matter of professional judgment that I used in drafting or preparing for this session. So yeah, next we come to is SS 620. We still have sufficient time to do justice to the topic, but I felt that SS 600 requires more time because you're relying on the other auditor who has audited the entire financial statements. And there are a lot of communications and so on. So as again, this one particular the importance of SSC using the work of an auditor's expert. So when you say auditor's expert, we are referring to an expert that is appointed by the auditor. So that's a clear distinction that we need to make between who's an auditor's expert and who's a management's expert. So when you talk about auditor's expert, is someone who has responsibility to report to you, and management expert is obviously responsible to the management. Management expert is appointed to assist the management in the preparation of financial statements. So like an actuary. Actuary is appointed by the management to ascertain the provision for gratuity so that they can prepare financial statements, whereas auditor's expert is appointed so that the expert is able to assist the auditor in obtaining sufficient and appropriate audit evidence. An example might be, review of impairment. So if your assets are stated at an amount and you feel that the fair value less cost of disposal might be significantly lower, you appoint an expert, seek guidance as to, what is the fair value for machinery. So this would be an example for impairment testing. Another example could be, tax litigation or a simple straightforward tax computation, wherein you might get an auditor's expert to get a sign off on the computation allowances, disallowances. So at this juncture, it is also really important to understand the term expert. So when you're calling or using the word expert in the context of SS 620, auditor's expert, or SA 500, management's expert, the expert refers to person who has expertise in fields other than accounting and auditing. Because obviously that is our domain, accounting and auditing. Anything outside our domain is something that we call an expert. So you might require the help of auditor's expert, as I said, in terms of obtaining sufficient appropriate audit evidence for impairment of PPE, or for example, fair valuation of derivatives. Obviously, accounting for derivatives is your expertise. How to account for the expertise for the derivatives based on India's 109. Okay, so it should be either FETPL, or you might have applied the entity might have applied hedge accounting. So how do you account it? How do you audit derivatives? As far as the completeness of all the derivative contracts goes, is your expertise. But when you're talking about, okay, fair valuation of derivatives, now fair valuation of derivatives might include a complex model such as a Black-Scholes model, which is a very dreaded formula that spreads across the page, and involves a lot of assumptions. Again, that formula is for call option, so you modify it for put option. So I'm saying that these are the areas. Fair valuation of derivatives is an area where you might need expert, but accounting for derivatives, ensuring completeness of derivatives, is something that auditor will take care himself. His team members will be responsible for that. Now, a situation might also arise that, say for example, the auditor also has qualification, which is, say for example, a CFA or something, in which case he might himself be competent to obtain sufficient appropriate audit evidence as far as the fair valuation of derivatives is concerned. Because, so say for example, management has used their expert for getting a fair valuation of derivatives. You as an auditor, Black-Scholes model. So in that case, you might run through the report of management expert, obtain sufficient appropriate audit evidence as required by SA 500, and be done with it. But at times, you might need auditor's expert, right? So whether it is required or not is again a judgment call. Not always necessary that if the management has used a management expert, it will be followed by an auditor's expert, or vice versa. So, say for example, management might have performed the impairment testing on their own. You might need a auditor's expert because complex machinery or something like that. So case to case basis is what we talk about. Again, when you talk about auditor's expert, he might be an internal expert, that is internal to the firm. So as a firm, you offer a lot of services. You offer audit services, you offer tax services, obviously to different clients. So you might have your own tax team. So you might seek their help or their clearance, in reviewing the provision for tax. So provision for tax is prepared by the management, and you need to review that. Okay, what are the allowances, disallowances, whether they are appropriate, not appropriate, as per the tax law. Now, tax law is a legal expertise, so it will fall within the criteria definition of expert. So you might get your internal tax team to review those tax computations. So you are seeking the help of an auditor's expert who is an internal to the organization, internal to the firm, right? In some cases, as I said, like impairment testing review, you might need a qualified engineer or a qualified architect or some other qualification, wherein the expert might be external to the firm. So make sure that you are aware who is a management expert, who is an auditor's expert. Auditor's expert can be internal, external. Make sure that you are aware that expert is expert in a field other than accounting and auditing. Once that is clear, make sure that you know whether or not you require the work of an auditor's expert. So if that is the case, then we come to SA 620. Again, just like the previous standard, I have divided this into 5 buckets. The genuine reason is, the index format was already available, so it was a matter of copy paste. Just kidding. So 5-point agenda for the previous standard as well as this standard helps me, communicate the requirement. So we speak about overview, scope exclusion, definition, need. What are the audit procedures that you will perform? Obviously, hiring an auditor expert does not relieve you completely of the responsibility. It is ultimately it is you who have to express the report, express the opinion, on the financial statements. What are the nature, time, and extent of audit procedures that you will perform? Obviously, you cannot have one size fit all. I cannot give you the audit procedures that will be sufficient in all the audit cases across the bandwidth. So something that we need to be mindful of. What happens if you feel that the auditor's expert work is inadequate for your purpose? How do you get into those? How do you get out of those situations? So again, you might have to perform procedures on your own or something like that. And finally, we come to reporting consideration as to how do you report on the financial statements. So having said that, let's start with overview of the standard. So let's see what is within the scope, what is outside the scope. So this standard is applicable when you are using the work of an individual or an organization who is an expert in a field other than accounting or auditing, and you're using that work to assist you in obtaining sufficient appropriate audit evidence. So if these are the boxes that you have ticked off, then welcome to SA 620. However, if there are situations where engagement team members include a members with expertise in, let's say you have a team member who is specialized in financial accounting for financial instruments, then obviously SA 220 will be applicable. Or when you're using the work of a management expert, then SA 500 will be applicable. So we should be very mindful of this fact. Now, every standard under the new scheme, or the amended standards that we call the recent standards, start with an objective. These object so how does it goes? SA 200 gives us an overall objective. So as per SA 200, our overall objective is to obtain reasonable assurance about the truth and fairness of financial statements as to whether they are prepared in all material respects in accordance with the financial reporting framework. So that's our overall objective. First overall objective, to obtain reasonable assurance. Second one is to then report. Now, to achieve these overall objectives, we need to apply a lot of standards. Each standard has its own set of objectives. So in that light, as per SA 620, it is your objective or your duty is to determine if or if not the auditor's expert is required, whether or not the auditor's expert is required. And if you decide that it is required, determine whether his work is adequate. So 600, you determine whether work of other auditor is adequate. Here you determine whether the work of auditor's expert is adequate for your purposes. So this is the scope, this thing. Definition is something that we have already discussed. When I say auditor's expert, it is someone who is appointed by the auditor so as to assist him in obtaining sufficient appropriate audit evidence. And when I say expert, I'm referring to an expertise in a field other than accounting or auditing. That's our expertise. So having said that, it could be an internal expert. Now, internal expert in the sense that even a person working in a network firm will also be called as an internal expert. Make sure that there are sufficient agreements, arrangements in place. Get the scope defined. Get the terms in writing with the expert. That more important if the auditor's expert is an external person. Get the terms defined. Get the responsibilities segregated. Get a sign off at the beginning. Set the expectations that this is what we expect of your work and this is how we are going to proceed. When you say expertise, it includes skills, knowledge, and experience. It's not only the skill, but a combination of these three things. Management expert is someone that is hired by the management, appointed by the management to assist them in preparation of financial statements. So management experts helps in preparation of financial statements to the management, whereas auditors experts assist the auditors in obtaining sufficient appropriate audit evidence. So here we need to be very, very clear that conclusion as to whether it is sufficient, appropriate, ultimately rests with the auditor. Expert is there to assist, only to assist to obtain that audit evidence. So his role will be in a supporting role, a supporting act that he will perform. So he will not serve on a platter that this is a conclusion that you give, obviously, because conclusion is something that that is a subject that is crux of assurance engagement, audit expertise. So conclusion, obviously, you have to reach as an auditor: adequate, not adequate, true and fair, not true and fair, modified, whatever is something that you as an auditor need to be mindful of. So be very careful while reading the definition. So if we do a casual interpretation, we might miss out something. But auditor's expert, as we all said, is someone who will assist you in obtaining sufficient appropriate audit evidence. Okay. Now, having said that, let us also discuss the division of responsibilities. So, as I mentioned, it was very clear from the definition itself, but the institute has left no scope for misunderstanding, misinterpretation. They have clearly stated that auditor has sole responsibility for the auditor opinion expressed, and this responsibility in no way gets reduced if you are using the work of an auditor's expert. However, in line with what was stated in the basic premise that we discussed at the start of the session, which was taken from essay 200, you can rely on work of auditor's expert if you follow the requirements as per essay 620 and conclude, that the expert's work is adequate for your purpose. Okay. So in that case, you might say that, okay, we have so relied. How will you report that is something that we'll see towards the end, right? So the division of responsibility should be very clear. Then we come to the first objective. So there are two objectives as we discussed. The first objective is whether or not the work of expert is required. Now, this is a professional call. So say, for example, as I give you an example like fair valuation of derivative, and you yourself have, sufficient knowledge about the derivatives, their fair valuation and aspects like that, then makes life easy for you. How does it make life easy for you? Because you already have that, subject matter expertise, and you yourself are competent to obtain sufficient appropriate audit evidence. So go ahead with that. But if you feel that, no, it's a material area and you don't have enough expertise, you might need the help of an expert, right? So it's like selecting when to use a lifeline in KVC. Just kidding. So yeah. So if expertise in a field other than accounting or auditing is necessary to obtain sufficient appropriate audit evidence, the auditor shall determine whether to use the work of an auditor's expert. So SS 620 has left this to your judgment, because obviously facts of each case will vary. So it has been left to your judgment. One of the aspect is, risk of material mistake. At what stages of the audit you might need an auditor's expert? So the answer is throughout. You might need it at any stage, right? So you may need it. An auditor's expert may be needed to assist the auditor in one or more of the following. So these are the examples taken from the SS 620 itself. So you might need it when you are understanding the entity. So say, for example, the client is a fintech company, and it's a little complicated. So you need expert understanding, or a very simple like understanding of ITGC, IT general controls. You might need an IT expert, you might need a technology expert, which generally would come from within the firm. So that is something that we need to be careful obtaining, and that is something that we need to be mindful of as a stage where auditor's expert will be required. He might also be required when you are identifying, that is saying that what could go wrong in the financial statements, or assessing the risk of material misstatement, correct? Determining and implementing overall responses to assess risk. So say, for example, your overall response is an impairment testing. So, and for that impairment testing, you need evidence as to the fair valuation. So you might need expert, right? Further audit procedures. So, sorry, overall responses is different. What I gave was an example of further audit procedure. And then at the end, evaluating the sufficiency and appropriateness on audit evidence. So I think a common example that fits all the categories would be an IT general control expert or ITGC expert that your firm might use. Apart from that, there are fair valuation, experts, or experts in the area of engineering, and all architects for impairment testing purposes. So you might need them at any stage of the audit. Ultimately, you should be very careful in determining whether or whether not the work of expert is required, help of expert, auditor's expert is required. Having said that, you have decided that, okay, I need to use the work of auditor's expert. So make sure first part, agree the terms at the beginning, get a sign off at the end. because as we said, documentation is really very important, and this will help you. Agreeing the terms with the expert again will serve a purpose, because the expert obviously will not have expertise in audit area, so he might not understand how that fair value is relevant to you, right? So he might not give a fair value. So he might not understand the fact that fair value is from a market participant, for example, because that's how IFRS 13 defines it, or India's 113 defines it. So, obviously, that's a presumption, but that's a presumption that he'll know that, but make sure that it is very clear to him. So whenever you're seeking the help, make sure that you agree the terms, so that you are very clear from your side, so that tomorrow you're not leaving any loopholes or any door open for the bucket to fall upon you, right? Be very clear. So communicate those things, even if it might seem very what I could say, very common, or something that assume that will be assumed. So better get it in writing and pass it on, so that the other person, there is no scope for miscommunication. Don't leave any scope for miscommunication. So even common sense matter, communicate, assess, correct, get a sign off towards the end, saying that okay, we have reviewed the provision for tax, and we have come across these are the allowances, disallowances, these are acceptable as per the respective sections of the act, and that's how we conclude that this provision is adequate for as per the provision for income tax act. Then you see whether and how it will be useful to you, right? So get the terms agreed. Once you have agreed the terms, and once the expert has performed his work, obviously, as we said, that you don't get absolved from your duty as an auditor, you'll have to perform certain procedures. What are the procedures that will start? And this will run simultaneously while the expert is performing his work. Even before the expert is starting his work, or even before agreeing the terms, you evaluate whether the expert has necessary competence, capabilities, and objectivity. So how can you check competence? So say, for example, competence might be a degree awarded by the reputable institute. Or say, for example, when you're talking about an actuary, so he's a member of the institute of the respective institute, correct? Capabilities is something that you assess based on his work experience, his area of, the clients that he has served. So get a brief profile from him. Objectivity is, the independence aspect. See whether he has related to entity or in any way manner related to the management. Get a declaration as far as that aspect is also concerned, right? The objectivity becomes all the more important, because when the auditor is when the expert is an auditor's external expert, right? So you should definitely inquire what are the interests and relationships that may create a threat to the expert's objectivity. Get an independence declaration signed from them as well, right? Once you have evaluated the competence, capabilities, and objectives, agreed the terms, obtain a sufficient understanding of the field of expertise. Because see, you have to conclude on the subject matter. So you should know, okay, what is his expertise, what is your expertise, and what is the work he has performed, whether it is adequate for my purpose. That's the end goal. So determine the nature, scope, and objectives of the expert's work. So while determining fair value, what are the aspects he has considered, not considered, right? In what light he has determined fair valuation? How, how he has utilized his experience, knowledge as far as that thing goes. So evaluate the adequacy of that work for auditor's purposes. Okay. Another thing, when you are evaluating the adequacy, what you will focus on is three things, which which is very important. So when you're using the work expert, this is like the heart. This is like the heart of the subject matter, and this is something that in real life will take a lot of time. So okay, when you have got, so before you have appointed expert, you evaluated his capabilities, competence, and objectivities. Then you agreed the terms, took an independence declaration and everything. You understood his nature, scope, and objective. Having said that, now expert has performed his work or started to perform his work. So see what is the source data. So I'll start from the bottom to top. That's how we generally build the file also. See what is the source data he has used, because there is IT terminology, which is garbage in, garbage out. So if the input is inappropriate, output is definitely gone for a toss. So if the expert works involve the use of source data that is significant to the work, so make sure that the source data is relevant, complete, and accurate. So say for example, uh, it involves fair valuation of an option, right? So you send all the relevant data, right? And all the complete data. Okay, these are the, so when say for example, it's a fair valuation of ESOP, and the ESOP is on parent company shares. So you send the relevant data. So you don't send yours. So the relevant data would be the share price data of the parent rather than the subsidiary. Because the subject matter of ESOP is the parent company. Send the complete data. So if he wants the data of moving or rather all prices over the last historic trend, send, make sure that obviously make sure that the data is complete and make sure it is accurate. Because if something goes wrong here or something goes haywire here, then the calculations goes for a toss. Then obviously more often than not, the expert's work will involve use of significant assumptions and method. So say for example, when you are fair valuing a company, a derivative, or which is a call option or a put option, there would be significant assumptions, like Black-Scholes has certain assumptions, and there'll be other assumptions like what is the interest rate. Okay, then make sure that these are reasonable, these are appropriate, because obviously assumptions and methods cannot be accurate. So we'll not use the word accurate here, we will use the word reasonableness here. So whatever methods they have used, are they reasonable? Like say for example, share option. Now he has not valued a share option as per the Black-Scholes model, but has valued, for example, by using some other model. I'm not sure what that model could be, but Black-Scholes is renowned model that is generally used. So get on a dialogue as to why the Black-Scholes model has not been used. Is it something that is not applicable in this case? That is why they have not used. Something like that. So get details as regards the relevance and reasonableness of those assumptions and methods. Source data, make sure it is relevant, complete, accurate. Assumptions and methods, make sure they are reasonable and relevant. Correct. Having said that, you will be able to conclude on whether as a whole his findings and conclusions are relevant and reasonable, right? And most importantly, are they consistent with other audit evidence? So say, for example, the other audit evidence is, say, for example, an impairment testing, whereby you have seen the company has reported huge losses because the machinery has remained idle during the current period. And the physical condition is also not very good. However, the impairment testing points out a fair value that is greater than the book value. Then see how does it fit the larger picture. Look at the larger picture. Don't just say that okay, fair value is higher, let's close the case. Make sure that it ties up with the other audit evidence, because many times mathematical models are a little funny. So subjectivity might get involved. So make sure that as an auditor, he's there to assist you to obtain sufficient appropriate audit evidence. Now you corroborate it with other audit evidence, corroborate it with your knowledge of business, and look into all those aspects before you can finally say that his work is relevant. So at the cost of repetition, maybe evaluate the adequacy of the work. How do you do that? Make sure the source data is that you've sent to the expert is relevant, complete, accurate. The methods, assumptions that he has used, that the expert has used are relevant, reasonable, and overall his conclusion fits the jigsaw puzzle in terms of they are not inconsistent with what you are concluding there, and they are relevant, reasonable. So make sure that these things are taken care of. And as I said, when you are applying SS 620, this is something that will take a lot of time of you as an auditor, because agreement sign off of documents would be very standardized. It would be just a matter of sending it across, right? And another aspect that might take a lot of time, a lot of audit time, is deciding whether or not an auditor's expert is required. Once you have decided that this is the crux, so you are not relying blindly. Most importantly, document it, right? How did you determine that source data is accurate, for example? So perform test on source data, right? Ensure the accuracy, completeness. So employee test, for example, or when you're sending ESOP valuations. So share price data or, share data as regards what are the different ESOP schemes that the company has in place, how many employees are covered, how many employees are sent to the expert. So make sure all these things are in place. Cutoff would become a really important thing here, because if a ESOP has been allotted to a certain employee near the year end date, that person might be missed out, or many a times you might need a auditor's expert report even before, the cutoff date, because the timelines for the audit might be very stringent. So you might need the valuation report immediately in the first week of April, whereas, so you would have started the process in the first week of March. So there might have been certain additional ESOPs. See whether they are material. How do you tackle them, right? And on these basis, you decide whether the work of the auditor's expert is adequate or not. Having said that, the extent of audit procedures, the timing, as we discussed, first week of March, first week of April, and the nature would vary on case to case basis. This is something that we have, as an auditors, we are trained, the NTE of audit procedures. There is no one size fits all. So what are the factors that will determine, okay, what extent, when, what procedures are required? So the first matter would be the nature of the matter to which that expert works relate, the risk involved, significance in the context of the whole audit. How important is that piece in the entire financial statements? Your knowledge and experience with the previous work. Because if you have already performed work with him, then the capabilities, competence, and objectivity, or other capabilities and competence are already in place, probably, so to say. So you need not go in depth about it. You just carry forward or roll forward those papers, right? So in that case, your extent of audit procedures might go down slightly, right? And whether the expert is subject to your firm's quality control procedures, then that objectivity testing becomes all the more, or rather relatively easy, so to say. So exercise your professional judgment, document it. Don't stop at exercising judgment. Documentation is really very important. Make sure the documentation are not one-liners, that, that the objectivity, capability, competence are evaluated. Have something to prove it. Make sure that they are cross-referenced, they are linked, and the file is an integrated file rather than silos sitting at different places. Because if you ensure these aspects, then you are fulfilling your role as an auditor. Many a times we step out of our shoes and do something, that is not really warranted. So let's try to fill our shoes first. Complete the documentation, ensure timely preparation, coordination, licensing, and yeah, we'll be a very happy profession then. Obviously, we still are a very happy profession. Just improve the happiness index. Now, God forbid, or I don't know if you use these words, but say for example, at the end you conclude that you send correct source data, the methods were appropriate, but somehow you get a feeling that the work is still inadequate. So agree on what further procedure or further work is to be done. Perform further audit procedures, right? At the end, if you're still not satisfied, still not getting sufficient appropriate audit evidence, then modify your opinion. If the matter is material but not pervasive, issue a qualified opinion. If the matter is material as well as pervasive, issue a disclaimer of opinion, right? So inadequacy might constitute a scope limitation. How do you report it in all circumstances? This was when it was inadequate. But what happens if the work is adequate? So SA 620 makes it very, very clear in terms of reference. So you cannot and should not refer to the work of an auditor's expert. This is clearly a different stance from SA 600, because obviously these are two different areas. So here the expertise is for someone other than accounting and auditing. He's not responsible for your, opinion. So whenever you are giving an opinion, or most importantly, when you're giving an unmodified opinion, you should not refer to the work of an auditor's expert, because it should come across that it is your opinion. However, if law or regulation bounds or requires you, say for example, maybe for transparency in the public sector, so some government also, or I don't know where it might be required, but if the law or regulation requires you, then you indicate in the auditor's report, you include a reference, but you also include a statement that such a reference does not reduce your responsibility for the audit opinion. So wherever you are mentioning that you have relied on the work of expert because you are required by law to do so, make sure in the same breath you also state that such reliance does not absolve us of our responsibility, right? This is when you are issuing an unmodified opinion. Now, whenever you are issuing a modified opinion, it might be pertinent or imperative, because you are supposed to give a basis for modified opinion. So then it might be the need of the hour to refer to the auditor's expert work or inadequacy, or otherwise of that. So generally, when you are making a modified opinion and you feel that the reference to the expert's work is necessary for the users to understand the nature of modification, it's relevant for users understanding of the modification, then include a reference, but again, in the same breath, in the same paragraph, state that it does not reduce your responsibility as an auditor. Okay. Also, as a professional courtesy, get the experts buy-in that you are quoting his name, his or her name, or the organization's name in the audit report that you're submitting to the users, right? So as a matter of professional courtesy, you need the permission, you may need the permission of the auditor's expert before making such a reference. Because again, tomorrow it might come to you that you have made a reference without asking. So make sure that this is included as a part of agreement only, terms of agreement, so that there's no back and forth. There's a standard clause which says that if required or if felt necessary, that you refer to your work. Okay. So this is as far as the reporting consideration goes out. So I'll very quickly summarize what we discussed in SA 620. So SA 620, we discussed that it is using the work of an auditor's expert. Now, when we say expert, we talk about of an expert being a person or an individual or an organization possessing expertise, that is knowledge, skills, and competence in areas other than accounting or auditing. So we call that person an expert. If the expert is hired by the management to assist in preparation of financial statements, the person is referred to as a management expert. If it is hired or appointed by auditor, the expert is referred to as auditor's expert. And why would a auditor hire him? So as to assist him in obtaining sufficient appropriate audit evidence. Whenever you are using the work of auditor's expert, be sure that ultimate responsibility in this assurance engagement, that is to issue or report and communicate your conclusion, opinion on the subject matter, is your responsibility. That is auditor's responsibility. You're no way getting absolved because you are using the work of auditor's expert. So in this context of auditor's expert, the auditor's expert might be an internal person that is internal to the organization, firm, or to the network of firm to which you belong, or it might be external. Correct. So if it is external, make sure that objectivity and other aspects have been duly taken care of. So that's there. Something that we need to be mindful, careful of. Management expert apply SA 500. Auditor's expert applies SA 620. A person expertise in the field of accounting, auditing, apply SA 220. So this is your engagement team members. Sometimes you might have expertise in other than accounting or auditing field because of your qualification, knowledge, or past experience of dealing with such clients, well and good, might not require an auditor's expert. Apply the thing. So on that basis, SA 620, we said that there are two objectives or duties of auditor. The first one is to, help you decide whether or not the work of auditor's expert is required. So that will depend upon a lot of consideration, like what is the risk of material statement involved, what is the subject matter on which the expertise is required, how critical is this to the organization, not the organization, to your report. So on that basis, you see that, right, you might need the help of auditors expert in various areas. So say, for example, right from business understanding to identifying and assessing the risk of material misstatement, drafting overall responses, drafting further audit responses, and evaluating the sufficiency and appropriateness of audit evidence. So you might need the expert opinion, right? Expert being expert other than accounting or auditing in these stages of the audit. Having decided that, get the terms agreed. Before you appoint an expert, evaluate the competence, capabilities, and objectivity. Objectivity, as we said, presumes a lot more significance when you are, talking about someone who is external to the firm, correct? So this is something that we need to be very, very mindful of, because the independence is impaired, then the whole, idea of relying on the work goes for a toss. So be careful. Then we come to the core audit procedures. You have evaluated the competencies, capabilities, and objectivity. Get the terms agreed, as we said, get a sign off at the end. Core procedures determine whether it is adequate for the work of expert is adequate for your purpose. Before that, understand the nature, objective, and scope of the expert's work. What is his expertise area? Be very clear that accounting for derivatives is your expertise, auditing for derivatives is your expertise, fair valuation of derivatives is someone else's expertise. Interpretation of tax law is someone else's expertise. That's a legal expertise that we call it. So be mindful of that. Get that role clarity. Make sure it appears in document as well. Next point, you have decided to use the work of other auditor. Now you of auditor's expert. Determine whether the work is adequate for your purposes. Correct. How do you determine? Check the source data, whether it is complete, relevant, accurate for the stated purposes. See what are the assumptions and methods used by the expert, whether they are relevant and reasonable, because assumptions cannot be accurate, they have to be reasonable. And then overall basis, conclude whether the expert's work, or findings are relevant for your purposes, or and relevant and reasonable for your stated purposes, and that basis conclude whether it is adequate or not. If you decide it is not it is inadequate for your purpose, get on a call, get on a discussion with the expert, see what further procedure he needs to perform, what are the further procedures you need to perform. If you guys don't reach to a conclusion and that constitutes a scope limitation or inability to obtain sufficient appropriate audit evidence, then see whether a modification is required. So if it's material as well as pervasive, disclaim from opinion. If it is material but not pervasive, issue a qualified opinion. Right? In all senses, the division of responsibility is very clear, that concluding on the financial statement is our responsibility as an auditor. Finally, when it comes to reporting consideration, which is the present slide, we say that we are not allowed to make a reference to the use of the work of auditor's expert. However, if the law requires us to do so, for example, for transparency or stated purposes, we should be very clear and state that we are not absolving or ourselves of the responsibility. The responsibility still lies with us. However, if you are issuing a modified opinion, it might be necessary to refer to the work of expert so as to explain the nature of modification, or because it might be relevant to the user's understanding of the modification. But again, state that it does not reduce your responsibility for the opinion. At the end, before you make a reference to the auditor's expert, make sure you get a buy-in, because as a matter of professional courtesy. So this is it as far as SS 600 and SS 620 are concerned. We are almost into the last 15 minutes or so of our session. So we'll take up questions if there are any. Yes, sir.
Thank you so much, sir, for such a wonderful deliberation. And now I request Honorable Chairman Kurchitra Branch for this question answer session. Chairman, sir, Raghav ji. Raghav ji, you're there. Raghav, sir, you are there. I hope some connection issue is there. I'm checking with Raghav ji. Raghav ji, I hope he is disconnected. Raghav ji, you are there.
Probably some network issues or something like that. Sorry for that interruption. Just give us a few minutes. And in the meanwhile, if you have any questions, please make sure that you post it in the relevant question box or chat box.
Sir, first question is in Maharashtra government authorized auditors who are not CA are, I hope they are allowed to do audit of charitable societies and trust under Maharashtra Public Trust Act. So, is it possible? Kindly put some light whether they can use their certified annual accounts form for 10B or 10BB to certified by a chartered accountant.
Yes. So, if I understand the question correctly, is when you talk about cooperative societies under this in the state of Maharashtra, we have the as per the act, a person holding some public diploma can also be appointed as an auditor. So, if what you are reporting on Form 10A, 10B constitutes an assurance engagement, that is, you are expressing an opinion, and for that purposes you are relying on the financial statements, you might always obviously apply SS 600, which is using the work of another auditor. But if you're saying that using the work of another auditor, then you'll have to demonstrate all the communications with the auditor of the cooperative society, evaluate the competence, capabilities, etc. So you'll have to go through the entire drill of this thing. So I'm not really sure. So obviously, in the sense that it will obviously constitute. You can always apply SS 600 in that case, because the standard is very clear that because the standard itself says that when you're relying on the work of other auditor and the other auditor is not a member of ICI, you should be very careful in evaluating the competence, capabilities, and objectivities. So you can do so. And I think we can make a similar reference to Form 3C8, wherein we state that sometimes the statutory auditor might be a different person and the tax auditor might be a different person. But in Form 3CA, 3CB, what we specify is that these financial statements are audited by another auditor. So that's how the form goes. So, and tax audit is obviously your responsibility. So in case of statutory audit, tax audit, the question of, relying on the work of other auditor does not arise. So same way in Form 10A, 10B, if you are clearly specifying the fact that, financial statements are audited by someone else and your responsibility is Form 10A, 10B, then I think SS 600 might not apply. So because I've not come across SS 600, so it's a bit open-ended answer. But if you can correlate it with Form 3CA, 3CB, Form 3CA, 3CB, SS 600 will not apply, because you are clearly stating that the financial statements are audited by other auditor. So, and we don't have we don't have we don't generally apply SA 600 in that case, where the statutory auditor is different and the tax auditor is different.
Okay. In this case, sir, have we had to get the approval of the client also?
Might be, but in my view, since the SA 600 is very clear that there has to be a principal auditor and component auditor, so I think it might not fit the bucket also, because there is only one entity. There is no component as such. So, that is how
Okay.
it will flow.
Sir, how to ensure the component auditor has adequate standards on quality control laid down in their firm, and reflection is there in the work done by them in the regard to our component in the group audit?
That's a very nice question. So what we can do is, first and foremost, get a declaration. See whether the firm is a member of ICI, because if it's a member of ICI, then SQC1, you can obviously say that they would have followed. Nonetheless, as he said, that we send a group audit instruction kit. So have a document asking for the competence of the engagement team members. So that way you will ensure the human resource requirement. Get an independence declaration for them. So you'll get SQC1 independence component. So wherever you feel that this is there, send individual documents, seek their confirmation, right? Rather than directly putting across a statement on SQC1. Yeah. And as far as first query, so since I'm thinking and speaking, I'd like to reframe my response. I would say that generally it will not apply, because there is no concept of principal auditor and component auditor. This is one entity. He is responsible for reporting on financial statements, and you are responsible for reporting on certain tax audit purposes. So there is no question of principal auditor and component auditor, because it's the financial information of the same entity. So 10A, 10B, generally it will not apply, similar to Form 3CA, 3CB. Yeah. So I think, sir, we have answered those two questions. Yes, sir. We have answered question number one, which was on
Raghav
form.
ji, can you hear me?
Hello, am I audible?
हाँ, राघव जी का ज्वाइन हो गया है, वो डिस्कनेक्ट हो गया था.
Sorry.
राघव जी, I have taken 4 questions. First 4 questions.
Yes.
You will start with the 5th question, sir.
First 4 questions.
Yes, I have already taken, sir. आपका डिस्कनेक्ट हो गया था वो.
Right. Sir, 5th question is whether NOC from the previous auditor is compulsory before acceptance of audit.
Yes, definitely. That's a matter of that's something matter that is communicated in the code of ethics. So as a professional courtesy, we communicate. We send a letter that is generally sent through a registered post, seeking or informing that we have been appointed as an auditor of so and so entity which was previously audited by you. Tell us if there are any professional reasons as to why we should not accept the assignment. Now, as a matter of courtesy, the predecessor auditor should definitely communicate his NOC. But in the absence of that, the fact that you have sent it by a registered post, the fact that it was delivered, and you have waited for good amount, where you have waited for a reasonable amount of time, that will serve the purpose. So before accepting, so say for example, if you sent a registered post mail yesterday and accepted the assignment today, then you are not waiting for a reasonable time. So wait for the response or wait for the reasonable time and then communicate your acceptance. So I think there are various case laws as far as the code of ethics goes on these matters. Yeah.
Right. The next question is, please share the process of making the group audit instructions by principal auditor to the competent auditor.
So generally, one thing is, if the firm is new, you might want to speak with certain experienced firms, and if you have that's a matter of professional collaboration that you might do with other firms. because those firms would have already been preparing group audit instruction kit for their clients. So I would suggest that you seek help from other firms, or maybe from some of the chartered accountants who have experience of working with them, and work on that, on preparing that kit on those lines. But generally, that kit would be a various word files followed by an instruction. So there will be an instruction file which will state the whole purpose, and then there will be those annexures. Yeah, so annexure on independence, annexure on quality control, annexure on planning memorandum, review memorandum, annexure on CARO, annexure on ICFR, so on and so forth. So
Right.
I would suggest seek help from seniors or other experienced firms.
Okay. The next question is, if a company has a foreign branch, the foreign branch is audited in their country, what precautions to be taken while consolidating such foreign branch with the head office in India? Good question, I guess.
So I'm sorry. The company has a foreign branch, and the foreign
Foreign
branch has
branch
been
audited in other country.
okay.
What precautions to be taken while consolidating such foreign branch with the head office in India?
Perfect. So whenever it's a foreign branch, so first make sure. So like it's a foreign branch in UK. So see whether it is audited by a person who is a member of ICAEW instead of Chartered Accountant of England and Wales. That is the case, makes life much more easier. So that's the first and foremost thing that you should look. Then obviously get on a call with the UK auditor or whoever is the component auditor. Tell him that, okay, these are your financial statements, well and good. These are in your final format. You will sign off, the component auditor will sign off on those financials. But give him an Excel format or something like that. Tell him that you get the management of the component to prepare financial statements in that format. So we call something called as a fit for consolidation. So right. UK branch management should prepare a fit for consolidation package, which might or might not be audited by the branch auditor. So if it is audited by branch auditor, again, your life becomes easy. But if the branch auditor is opining only on the statutory financial statements as per the UK framework, then you will have to do the audit of that fit for consolidation package. Make sure that these division is very clear at the start itself. So if the fit for consolidation package is audited, again, level of reliance increases. Get in discussion with the management of the parent on how do they draft this fit for consolidation package. So the fit for consolidation package should include the financial statement reporting format as per the Ind AS. I'm assuming Indian company Ind AS following. Then it should have annexures for regulatory requirements required by Schedule 3. It should have various annexures for CARO, ICFR, so that when you are consolidating, you get direct information. Because if you're just relying on statutory financial statements of foreign branch, you might not get information about CARO, you might not get information about ICFR, you might not get information about additional regulatory information. And at the end, if you tell the branch auditor to do this, it might be too cumbersome and he might refuse straight away. So have a planning process at the start.
Right. The next question is whether internal auditor's report can be relied where the accounts are in arrear. There is a long gap between internal audit and statutory audit, and large portion of documents or evidence are either eroded or not easily accessible to the statutory auditor.
So there are two things here. One is the use of work of internal auditor, which is a separate standard in itself, which is SA 610. So internal auditor help we can use in two ways. Either we seek a direct assistance, we tell him that under our guidance supervision, you perform this particular work, or we rely on the work that he has already performed. So the question is, can I rely? The answer is yes. As far as the other part of the question, where the documents are eroded, missing, etc. So long ago, AASB had issued a statement or a guidance note. I cannot recollect, but it was a guidance note on audit in case of missing records. That has recently been, or rather, there has been a long time since it has been withdrawn. But what you can go to that document from the internet, see whether it is helpful, how it is helpful and relevant in your case. So audit in case of missing documents. Obviously, there are very high chances that it will be a scope limitation and you might end up issuing a qualified opinion or a disclaimer of opinion. If you need help in drafting reports, so go to cases where there have been, so say for example, Satyam audit report later on, issued by the auditors, wherein, revised after its consolidation with Tech Mahindra. So they would have given a lot of disclaimers. So might take them as a base. So, bits and pieces guidance will have to be taken from various places.
The next question is, in the auditor audit report, is it necessary to mention that auditor has used the work of an expert?
It's not mandatory to mention the use of other that you have used the work of other auditors expert. Rather, it is you need to make sure that you do not refer to his work. So when you are using the work of other auditor, it is mandatory to make a reference. But when you are using the work of an expert, you are restricted. The standard does not allow you to refer to him unless obviously the law requires you to mention. So expert don't mention, other auditor should mention.
All right, sir. Thank you. These were all questions.
Thank you so much, sir. So all the questions were very interactive and thanks.
Yes. So I thank you, CA Kumar, for this wonderful session. This was a really meaningful session for us. And as I said, this is yuga of expertization and collaboration. So we always need some other other partners to rely upon. And as you as you said, the world is a good place. I really wish that everyone always be happy and smiling in this busy session of audits. So now I request CA Anilji to please continue the session and give final vote of thanks to.
Thank you, sir. Thank you, Chairman, sir. It was a really wonderful session. Thank you so much, Kumar Rai Singhani Sahab. You have covered both these standards in a very lucid manner and covered all the aspects relating to this using the work of other auditor as well as the auditor's expert. Sir, one last question I have received. Form 15 CACB is certified by a chartered accountant for remittance to be done abroad to a NRI. Does this comes under the scope of SS 600 or 620?
I don't think so, because it's a certification and there is no other component or something that you are relying upon. So it's a certification. So I think there are various guidance note on certification. So that needs to be followed. Whereby you should make sure that whenever you are signing on a Form 15 CACB, make sure that you take a written representation, because what I have observed is those written representations are missing. So if you are signing on Form 15 CACB, make sure that management is signing on something that they are providing to you. Obviously, check the remittances and all. But yeah. So rather than 600, 620, get a management representation, like how we do in case of audits.
So thank you so much, sir. Now we come to an end. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I extend my heartiest thanks towards you, Kumar Saab, for sparing your valuable time and enlighten all of us on various intricacies on both these standards on this audit of using the work of other auditor as well as internal auditor. You have covered both these standards in a very, very simple manner with the lots of examples, and you have covered all the questions. I also extend my heartiest thanks towards the Honorable Chairman of Kurukshetra Branch, C. Raghav Gargji, for co-hosting this webinar as well as moderating this webinar. So thank you so much, Honorable Chairman, Sir Raghavji, for your precious time, as well as the learned speaker, CA Kumar Rai Singhani Sahab, for your valuable knowledge. Thank you so much on behalf of AAS.